inflation hasn't spiked as hard as we thought. Most recently, the spike up as well as the correction down had a lot to do with tariffs and Trump implementing tariffs. I think that it will run to the upside in the future if certain variables continue to be present in the market, mostly uncertainty. Other than that, this is a historical year no matter what happens.
Hello and welcome back to Soar Financially, a channel where we discuss the macro to understand the micro. My name is Kai Hoffman. I'm the EDGE mining guy over on X, and of course, your host of this channel. And I'm really looking forward to bringing back Gary Wagner. He's, of course, the brain behind thegoldforecast.com and somebody I absolutely love chatting with. He's a phenomenal technical analyst, and he's gotten his gold calls absolutely right over the last few months. And I'm excited to get an update from him. Like, where's gold trending? What is happening right now? How are some of the macro drivers impacting gold, in particular the US dollar? How are the tariffs affecting gold and the tariff talk? Lots to discuss here and get an update from Gary. He was only on about 2 months ago, but he's nailed his call. So we had to get him back and try to understand, like, how is gold still so strong, of course. I shouldn't be saying that. I should be saying, why isn't gold higher, Gary? You know, we'll talk about that in a few short seconds. But before I switch over to my guest, hit that like and subscribe button. It helps us out tremendously. It brings phenomenal guests on this program. So thank you so much for doing that. Now, Gary, aloha. Thank you so much for joining me here again. It's good to see you.
Aloha. It's great to be back. Really great to be back. And gold's doing some interesting stuff, but it's not out of the realm of what I believe were likely realities after touching the record highs that it did and then coming down. I still think the performance in gold has been stellar, although it's well off of what we saw as record highs. The most recent high being around 34.65. That is this top here. That occurred on May 6th. From there, it went to a pretty severe low, roughly 31.80, and then has rebounded quite well. So, considering everything and really considering the massive run that gold has had, even if you go back to as early as November, gold was at $2,670. I mean, just fathom that at $2,670 in November, and here we are months later, not years later, and we're looking at a robust troy ounce costing well over $3,000. Right now, pretty much at 3,300 in futures, so spots can be right around there. That's phenomenal performance. That doesn't bode well for other events because gold tends to run to extreme levels during periods of uncertainty, geopolitical unrest, unknowns being present within the economic environment. And so for those reasons, I always feel better when gold prices are lower. But as a technician and an enthusiast of gold, I believe that it is well priced and properly priced, Kai.
No, fantastic. Gary, you really nailed it. You said by 3,300, 3,400 by year end last we spoke. That was just at the end of March. Of course, gold, as we all know, and you just mentioned, gold overshot that target by a little bit. It even touched on 3,500 intraday. It was like for 10 minutes, 15 minutes, which was nice to see, but didn't last, unfortunately. But let's quickly talk about that. Like, why did gold perform so well and why did it overshoot your target?
We had a lot of unknowns in the marketplace in terms of leadership in the United States. What we did know is the policies of the former administration in many instances would be done away with, and new economic and political strategies would be evolving with President Trump. And so when you've got that type of dramatic change, it raises a level of uncertainty to a very, very heightened state. And that is what we saw. Realize that the geopolitical conflicts that are embedded within the world have existed for a couple of years. They're still in the news cycle. It's still a terrible situation, not only in the Middle East, but Russia and Ukraine. But that's not what seems to be moving gold recently. Most recently, the spike up as well as the correction down had a lot to do with tariffs and Trump implementing tariffs, and then those tariffs being questioned by judges, and that's kind of in limbo. And then there's a new thing with whether or not China is sticking to their agreement. But the key is global trade really is what gives the global economy the robust and solid world GDP that we've seen recently, and that's what keeps the clocks going, so to speak, the economic clocks of growth. And so that's why gold has been so robust. Specifically, the tariffs and implementing the tariffs had so many unknowns that inherently it would really ratchet up the level of uncertainty as how it would affect the economy. Specifically, inflation, it was thought that it would really drive inflation higher. We're recording this on Friday, and the Bureau of Economic Analysis came out with the most recent personal consumption expenditures, PCE, which is the preferred inflation index of the Federal Reserve. And it rose by an annualized rate of 2.1% in April, down from 2.3, and actually came in under the consensus estimates. So rather than seeing a huge uptick in inflation, as many economists believe we would see with tariffs being imposed, because the tax adds costs, and added costs is inflationary. In fact, we're not seeing that. And so that's an interesting facet that we're just trying to digest to make sense of.
No, absolutely. Maybe a bit of a question mark there in regards to oil. Do you think there's an impact from the oil price, which is under pressure, of course? Any impact there on in inflation there? Just what's your estimate?
Well, you basically nailed it. Oil has been historically at the lower levels rather than the higher levels, and that's the number one cost of production in almost every product. It isn't transporting any product. It's a huge component of the cost of anything that consumers buy. So the fact that energy costs remain low keeps the production of those products low, keeps the actual shipping of those products lower, and therefore we're not seeing the inflationary pressures. And I would have to say that, Kai, that might be hitting the nail on the head as to why we're not seeing inflation as high as was originally perceived.
No.
It could go.
No, Gary, we last spoke about a week before Liberation Day, roughly speaking. Lots has happened, of course, since, but we need to talk about the reaction of the market on Liberation Day, because gold was up. Bonds and the US dollar were down that day, in particular in the 48 hours after the announcement here. What do you make of that trading behavior? Is that something that's being reflected in your chart analysis as well?
Well, I'm looking at the charts to get the correlation. If I'm correct, that was April 2nd. Is that correct, Kai?
That's correct, yeah.
Okay, so you had gold right around on April 7th. You had it down at around 3,000. And it really didn't start taking off till Wednesday, the 9th day of April. That's when it would run from 3,000 up to the all-time record intraday high in futures, 3,509, above $3,500 an ounce. We did get a pushback. In other words, from that point, that was an unsustainable price, obviously. And gold would then fall to approximately 3,270. It would move back up to the highest closing price on records for June gold futures, which came in roughly at 34.65. It opened higher the following day, meaning on the 7th of May, and then dropped to a low below 31.80. And so we've seen a real solid recovery from 31.80 to 3,300. And so we've seen kind of like an oscillation where you get this unsustainable high and unrealistic low or unsustainable low. And right now it's kind of pegged in the middle of that, which is where we're seeing this. This represents a 38.2% Fibonacci retracement from the short data set of the low of 2974 to the high above 3,500. So it's a very short data set, and then I have a longer data set. The other thing that's noteworthy on a technical basis on this chart is that gold has remained solidly above the 50-day moving average since the middle of May. And of course, the 50-day simple moving average is what the majority of market technicians use to quantify whether a stock or commodity is in a short-term bullish uptrend, neutral, or downtrend. Trading above the simple 50-day moving average is considered extremely bullish. And as it moves higher and away from the 50-day, that shows you the momentum is building in the market. We see that the momentum has waned a little bit, but it's still real solid. 32.61 is the current price, 64, 32.64, the 50-day. And pricing right now is sitting at 33 and change. So solid parameters for gold. The fact that it's holding at these extreme highs, historical highs, is significant.
No, absolutely. Like it's really amazing to see that it's hanging in there because I've said it in the program personally. Like that's my personal opinion. I thought gold was quite overhyped with Elon Musk, Joe Rogan, and many others talking about gold. I think we touched on that as well. I thought it was like, okay, this is overshooting the target,
Yeah.
sort of like what we've seen with Bitcoin a little bit. I'm trying to draw an analogy here, but Bitcoin overshot 100,000 and then retraced
Back
brutally.
down.
Like a lot of air was left out of that balloon. It's now back over 100,000. Of course, different story. But gold is hanging in there way better than I had personally had expected. Just maybe to look at the fundamentals here, like what is keeping gold at this level? What is not letting that air out of that balloon right now? I know it sounds almost a bit of a redundant question there, Gary, but like I'm still yet to disbelieve that we're hanging in there.
Well, as we've just talked about, inflation hasn't spiked as hard as we thought, but the possibility of that occurring further on down the road is to me a main contributor that's keeping the support level above 3,200 and 3,300. I think that if it does break below current pricing, it's at a fairly critical point. It could go as low as 3,200, but I see 3,200 as a level of major support that in fact should hold, and should hold if we're still witnessing a bull run in gold. A break below that would signal that we might have seen the end of that bull run and move from a very bullish market sentiment to a bearish market sentiment. Because we both know, Kai, that I think Paul Volcker put it best. He goes, trees don't grow to the sky. They never have and never will. He was talking about interest rates. But if we can reflect that and kind of carry the analogy to gold, gold doesn't continue to gain without any resolution or without the ability to find a base and then not to move to higher ground. We actually see gold at a mid-range because we have a much higher high than is currently trading, $200 above current pricing. We've got solid support, $100 and $200 below. So we've got a very wide range in terms of 3,000 to 3,500 in which gold can stay in that range. And that's what's most interesting to me. If you look at the chart that I brought up, and we look at 2,500, this is back in July of last year. So 25 to 3,500, $1,000 move, but you had a fairly strong move up, very, very shallow corrections. Moves up, shallow correction. What has been predominant in the market up until really this last couple of spikes where it moved to 3,470 and then down to 3,200, you had huge upside ticks and very, very shallow corrections. That wasn't the case on this last correction. It was sizable, but compared to what we've seen recently, gold seems as though it's found a footing because it's not near the all-time record highs nor near the recent lows. It's kind of trending water right in the middle. And that to me says that it's kind of found a foothold at current pricing. It could go $50, $100 higher or lower, but it's comfortable in this area. No one's able to really bang the market down without some traders believing there's value and they buy the dip, or move it up to 3,500 and other traders say this is time to hammer it and pull profits on our long position. Right now, it seems as though it's at a range where traders believe they're comfortable with where it is, and they're not looking for these big spikes up or spikes down. That could change at any time as fundamentals change, but at least this is the first time that we've seen it move kind of into a mid-range between recent highs and recent lows.
What is the impact of the DXY here on the gold price? We've dropped below 100 again on the DXY. That's the dollar versus other currencies, of course. But what's the impact? Like, I'm surprised that it's actually that low, the DXY, and gold hasn't moved a lot higher there.
Well, look, we saw the dollar index, and I'll go pull up a chart to illustrate what I'm talking about. Let me just compress it. If you go back to January 2025, the dollar index is at 109.95. Let's round it up to 110. It went from 110 down to an intraday low. I'm looking at a daily chart, I believe. Yes, a daily chart of 97.96. I'll round that up to 98. So we've seen the dollar in relationship to the basket of currencies it trades against in the dollar index decline in value by 10% this year. That's a tremendous drop. And of course, this is a primary cause for gold running, because when gold is paired against the dollar and the dollar is losing value, there's 100% correlation between dollar weakness and gold strength in the reverse. And so this is what we've seen. Then you add bullish momentum from traders bidding the precious metal higher. You get a double whammy, so to speak, and that's why we've seen gold move to these levels. The one chart I'll pull up right now is where I think we could be heading. And the first thing that we'll note is that we have had a series of highs, 3,500 here, 34.44 here, and 33.49. So we've had a series of lower highs. If we look at this bottom and this bottom here, we've had a series of higher lows. Series of higher lows, a series of lower highs is a flag formation. This looks like, or appears as though it might be, a bull flag, but we will have to see as it gets closer to the apex and breaks. It can break either way. Typically, in this kind of a market pattern where we've had strong moves up and then consolidation, and the consolidation is this exaggerated high 3,500 down to about 3,100, $400 price swing. We could see gold, if it maintains this bullish momentum, I think move as high as 3,600 and do that by the first or second quarter of next year, Kai.
Very interesting, because it looks like your bull flag, the triangle, the tip of the triangle coincides with a little bit of the trade talks and some of those dates as well, which could be really absolutely explosive. So really interesting. Gary, I have to ask you, since I'm seeing June, July, August here on the scale as well, how does seasonality factor into this? Does it play a role at all?
I'm personally going to say it's not playing a major role as it has historically speaking. It's almost a moot point in what seasonality. Gold is running on fear and uncertainty, and those have no season. There's either a lot of that within the public perception or not very much of it at all. And there's a lot of uncertainty. That uncertainty factor has been diminishing, and that's why we saw gold begin to trade down. It kind of backed off of the recent highs as the trade negotiations and tariffs did not result in an out and out trade war. It didn't collapse any financial country or system, and the sky didn't fall in. And so therefore you saw gold kind of back down, but anything can happen in the future. But that's why I think where it's at right now is a comfortable midpoint. I think that it will run to the upside in the future if certain variables continue to be present in the market, mostly uncertainty. Other than that, this is a historical year no matter what happens. I mean, who would have thought if we talked 2 years ago that we'd be talking about gold hitting 3,500 recently? Come on.
It's quite unbelievable, actually. But yet again, like, I don't know, do you look at volume? I always ask you about volumes as well. Like, have trading volumes in gold in general increased, decreased, anything out of the ordinary there? Because depending, if you look at it, the mainstream or the generalist still not looks at gold as much, despite the Bank of America fund managers survey saying that gold is overbought, but that's a survey amongst professionals.
Right. Well, if I look at volume now I'm not looking at spot, I'm looking at futures, but volume spiked really high back in April here, but it's been very, very solid volume. Of course, it's been the down volume days that have drawn the attention. Beginning of April, 20th, 21st of April. But volume's been exceedingly strong. You've got to realize there has been consistent central bank accumulation. That's been ongoing. There's been tremendous trader awareness of gold as not only a strategic asset, but one that's been outperforming many of the other asset classes. Of course, particular stocks have had stellar performances, but there's a reason they call it the Magnificent Seven. It's 7 stocks out of hundreds of companies. So consider gold as a single asset. It's performed very well. It's in the eye of professional traders. Central banks are accumulating, and consumers can buy it at Costco. It's pretty mainstream right now. So that's where that support comes in.
Yeah, I think we had Ronnie Stöffler on as well, and we actually titled the video "Gold Has Become Mainstream." Right, so fully agree there that it is a mainstream commodity now. Gary, wonderful insights. Are we anything missing about gold right now? I think we've covered it comprehensively. I think from your point of view.
I've gotten any of my points that I really think are important for the trader, novice, or just those thinking about getting a toe wet in the water, especially for those that haven't accumulated. This is a tricky time. How do you buy gold at $3,300 an ounce when it was at $2,500 less than a year ago? The answer would be carefully and slowly, is what I would say. Strategically, you would probably want to start smaller than before this run up. For those that have been accumulating, they're going to start layering out. They are either going to liquidate or buy in much smaller quantities if they were on a program where they were accumulating on a set level, every month, every 6 months or something like that. I do know that some of my larger clients that were large physical holders actually did a lot of liquidating over the last month. And I can't fault them. I mean, if you accumulated a lot of gold and then watch it move up to 32, 33, see it at 35 and then go down. I think it was Herbert Hoyle, a legendary stock trader of the 50s. He was being interviewed and they said, let me ask you, we watch all of these investors and traders, and some make money and some don't, but you seem to consistently make money when others don't. How do you do that? He goes, well, I always sell it. I always take profits. I don't know. And it was that kind of ideology that I think we've seen in the market, and we certainly saw it in the price.
No, absolutely. Yeah, a lot of people are selling. Like, we even in Germany had newspaper articles telling people to sell their gold now, whether it's tooth gold or jewelry or anything, because gold hit 3,500, right? And
exactly,
that's sort of that mentality there. Fantastic. Gary, wonderful conversation. Really appreciate the update. Glad we got to do this like in more succession now and not wait a year to bring you back on. So really appreciate that. Really good update. Where can we send our audience? Thegoldforecast.com, obviously, right?
Thegoldforecast.com. And of course, for Soar Financial, if they type in Soar, if they do want to look at our premium service, they're going to get a 30% discount off of the monthly, quarterly, or annual. That's what we want to do for those that have been following us as our way of saying thank you for your loyalty and support. But thegoldforecast.com, of course, daily articles continue in Kitco Media. I've been doing that for 12 years. Don't plan on giving up on that. Those are the best ways to look at me, and our YouTube channel, thegoldforecast.com.
Fantastic, Gary. Wonderful conversation. Thank you so much. Mahalo. Really appreciate it. And we'll have to get you back soon to catch up. Thank you so much.
You.
Everybody else, thank you so much for tuning in. Hope you enjoyed this quick and short update with Gary Wagner of the goldforecast.com. Really, really insightful. Really appreciate his gold calls as of late. Or not as of late. I've always appreciated his gold calls, but he's been spot on. It's been absolutely fantastic. So I hope you enjoyed this conversation with him, this update. If you did, leave a comment, leave a like down below. And if you haven't done so, there's a free way to support us. Hit that subscribe button. Thank you so much for tuning in. We'll be back with lots more here on Soar Financially. Take care.